Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this late Friday morning as usual on August 11th. So when you're looking at the evidence right now as a whole, to me it's kind of like two different worlds for the most part. Not totally, but pretty close. When you're looking at the top-down evidence, the major indexes, the intermediate term trend, long-term trend, health of the broad market, even things like the action of defensive stocks, which are, outperforming a little bit, but they're not running higher at this point or anything like that. When you look at that whole ball of wax, it plays into what we've been talking about really for weeks, which is like we might have a pullback here. It should be relatively mild, and the next big move is up. In fact, I'm going to spend a few minutes going over comparing, I should say, the NASDAQ today to 09 and 03 and those initial pullbacks, and it's kind of eerily similar. We'll see what happens, okay? On the other hand, you have growth stocks, which you've really seen a lot of intermediate term breakdowns and damage, or however you want to phrase it, but just whether it's big cap or small cap or AI or something else or speculative or great sales and earnings growth, there's just been a ton of earnings gap lowers, break of the 50-day lines on huge volume. I'm not talking about dipping below the 50-day line for a couple days. I'm talking just collapsing. So to me, I just take those as two separate things. I still think the odds favor this pullback. I don't know if it's going to last 2 more days or 6 more weeks or whatever, but this pullback being sort of a normal retreat after the thrust we saw in May and June that will lead to higher prices. On the flip side, growth stocks, there is a lot of damage. There are a lot of not a lot, there are some names that are still holding up well or, have broken down, but not hugely so, where if they really snap back, they could actually be pretty tempting. But there's a lot of damage out there. There's a lot of names that were riding on their motorcycle at 50 miles an hour and fell off. They broke some bones. They have to be in the hospital for a little while. They don't have to be in the hospital for 2 years. It's not 2022 out there, but there's some damage. So that's just kind of what I'm seeing out there. Overall, then, it's really more of a stock-by-stock thing. In Cabot Growth Investors Model Portfolio, we have a lot of growth stocks. A lot of them got hit. We're up to half in cash, and we might even go higher. It's just hard. So many things, no matter what the numbers are getting hit. They're just selling off. They're selling on strength. Something like Top 10 Trader, we've done a lot of selling too, but there's a lot of names in there that are holding up well. Obviously more cyclical names and transports and oils and all that sort of thing that are acting just fine. So I wouldn't be selling wholesale and throwing those things overboard, but you have to respond if something's breaking down. So it's really more of a situation. Going ahead, I wouldn't be pushing the envelope right here, whether it's cyclical stocks or growth. But again, I do think the odds favor the next big move in the market being up. And that should be a good thing, for everything down the road anyway, okay? Anyway, enough of the preamble, I should say. Let's hop in the charts. As usual, I'm using MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So first I want to run through the indexes real quick just to kind of show you what's going on. To this point, the NASDAQ, which is the weakest index that we look at, major index I'm talking about, we're down to this morning's low as I record this, again, late in the morning. The index is down maybe 5.5% total from its high, okay, the NASDAQ. And that's kind of the worst one. And it's a little bit below the 50-day line, which I'll get to here in a minute. S&P 500 kind of right to the 50-day line. This is normal intermediate term stuff so far, okay? And then you look at sort of the broader things. Again, they've come down too, but sort of down to the 50-day line. This is the small cap. This is MDY, not even touching the 50-day line yet. Kind of just a normal, forget the moving averages, just kind of take it all out. If you just draw it, you kind of had something like, this, and then it kind of came down here. And if you just looked at that, is it perfect? You always want it to go up, but, it certainly looks like a normal pullback to this point. And then you have the New York Composite, again, just kind of a normal pullback to this point. Now, again, maybe we come in next week and growth stocks or the weakness there infects everything else. Maybe interest rates go nuts on the upside. I mean, it's certainly possible. And maybe all these things dive below the 50-day line, and that really does get the fear level up. We'll have to see how it goes. But to this point, it's all pretty normal in that sense, okay? Now, what I wanted to show you was, so this is the NASDAQ again right now, okay? 5.5% down and just dipping a little bit below the 50-day line, okay? If you kind of take this, I'm going to move this back in time, which is kind of cool. I like precedent analysis. You can't go too far with it. It's a guide. It's a wind at your face or at the back. It's nothing to, go nuts over. But this was the 2009 bottom right here, March 2009, kind of the generational low. So I'm not directly comparing the two, but it was a bear market, obviously, and a pretty decent one, especially for growth stocks and for everything. And then we rallied here. And the first pullback really started here. And what's interesting is you kind of had this sort of initial dip, rally, and then you kind of dipped for a few days here. Long story short, this was about, I believe it was 17, 18 days long before we found support. And then you can see we really spiked to new highs and kind of continued sort of a 2 steps forward, 1 step back advance, pretty much the rest of the year there in 2009, okay? When you're looking at 2003, which again, it was a huge bear market, so not directly comparable, but there was a lot of things similar about the internet bubble crash and what we saw kind of with all the ARK stuff, ARK funds and all that stuff in this recent bear market. So again, you had this rally here. And again, you kind of peaked here in the summer. You had one down, kind of back up, and then you kind of straight down right below the 50-day line. And again, shot back up. And again, it was sort of choppy, but you worked your way higher, nicely higher for the next many months, okay? This is just a general, you can get into the days. Again, that was about 18, 19, 20 trading days, depending how you want to, exactly measure it. With the NASDAQ here, again, you kind of had a sharp dip here. You bounced back up, and now you've had this dip below the 50-day line. Does that mean we're just about right here today or Monday, we're about to soar higher? I hope so. I'm just sort of playing it out as a precedent analysis, saying that from a top-down perspective, what we're seeing here is not abnormal. Now, I mean, if this was looking good, but the number of stocks hitting new lows were going bananas and, I don't know, small caps were, down 20%, from their highs or something crazy, then obviously, the comparison doesn't hold. But when you're looking at all the other sort of top-down evidence, it's not perfect, of course, but it looks pretty good. So I thought it's kind of interesting how it's played in so far. And by the way, from this top, it has been, I think, 16, 17, again, how you measure it, 18 trading days. So we're kind of in that same ballpark. So let's see what happens. I'm not predicting anything. I'm not going out and buying today or Monday and saying, oh, hey, we're at the bottom. But you have to understand that some air had to come out of the balloon. Unfortunately, most of the air has come out of the growth stocks, but unfortunately for me, but some air had to come out of the market's balloon. It has come out, and we are reintroducing some fear here. Interest rates are a fear, that sort of thing. So let's just see how it goes. Maybe we just kite lower, but so far it's fairly normal, okay? Again, looking at going beyond sort of what we're seeing here, looking at the broad market. Again, this is transports. This is actually the Dow Transports ETF, IYT. Just a very normal controlled pullback. You'd like to see it kind of resume its advance, but so far it certainly looks under control. It doesn't look like it's, doing one of these things kind of straight up and straight back down, okay? Obviously, oil and oil services look strong. Dances to its own drummer a little bit, of course, with oil prices. But we're seeing more of this, even like some coal stocks and, other commodity names. And then just generally, industrials. I've mentioned the XLI before. It's not, the most exciting ETF. But again, a few days of selling, but so far it's just kind of hanging in this range, very reasonable after the recent run. Could easily, pull back further and still be normal. So we're seeing a lot of that action, okay? On the flip side, when you're looking kind of under the surface beyond just the NASDAQ or what the index is, okay? Chip stocks were obviously kind of heavy in the AI thing, but they were kind of the leading growth area. This was your AI pop here. And you just kind of had this sort of choppy advance, and individual stocks did pretty well. But now you're just kind of seeing the sector, I don't want to say melt down, but it's certainly weak here. Giving up at least the intermediate term ghost, I guess I would say, okay? Look at the ARK fund. Again, I don't want to key too much, but just kind of straight down here in sort of these aggressive growth stocks, okay? The IPO fund, same sort of thing, 37 to 32 and a half in a week and a half, okay? It's not, I don't know I don't know what Kathy Wood owns day to day. I'm just saying in general, when you're looking at some of these funds, IWO is the Russell 2000 growth, just looks a lot more like, weaker than the NASDAQ as opposed to, industrial stocks or transport stocks, stuff like that, okay? And then moreover, you're just seeing, I could pull out a bunch of names, but this is, it's not just small speculative stocks that got hit or somebody missed earnings that got hit. Okay, you can understand that. Here's Palo Alto Networks. Not that it was the biggest leader ever, but, 200 to 260, call it round numbers. And then it goes all the way back down to 205. Okay. Now this was egged on by their peer Fortinet, FTNT, which had been, again, was it the biggest, sexiest leader? No, but it had been acting well really for months and gave up, I don't even know. I didn't do the percentage, but 75% of its gain in one day type, or I guess a couple of weeks, but big earnings gap down. Shopify, this isn't as bad, but again, you kind of had this nice earnings action here, and then it's just kind of, again, giving up the intermediate term ghost. Even Apple, I'm not going to get into Apple because it's a whole different animal and stuff, but again, kind of a clear break of this uptrend, clear break of the 50-day line, big volume, all the rest. Datadog, DDOG, off the bottom move, not the biggest thing, but breakdown, kind of a peer of its Dynatrace, same sort of thing. I mean, it's just all over the place. Palantir, which was kind of this one was a little bit more not speculative, but it was a little bit more of an AI hype thing, but just from 20 to 15 in whatever 7 or 8 days or whatever that was, pre and post earnings. So when I look at a lot of these, like if you go back to say like Shopify, I had a question on this. Again, I would say intermediate term, could it just come straight back? Sure, anything's possible, but odds favor, there's going to have to be some repair work done, maybe some lower prices first, then it rallies up, then it comes back, that sort of thing. And maybe a month or 2 or 3 or whatever, it's ready to go again. Or maybe Shopify is just, it's an old leader and it's done for. But I'm just saying in general, this sort of chart pattern, when it comes to growth stocks, you're seeing a lot of it. They're either, done for a while or, they need to repair the damage sort of thing. Okay. So it's really just sort of two different worlds you're living in. And I wouldn't ignore Shopify because the market looks good, but I also wouldn't ignore Shopify if you own, industrial stocks. I wouldn't go sell them all, but I wouldn't be piling in on margin to industrial and oil stocks right now, given that, there's a few, cracks in the armor, obviously, for the market. Okay. Now, in terms of ideas, the good news is it's not hard to have a lot of ideas out there. Some of them aren't actionable right now, and I'm going to start with those, which might be one of these things where if the market, say I'm right, and the NASDAQ, I won't say I'm right, say the precedent plays out is what I mean, and the NASDAQ maybe falls a little bit further, but then starts to really snap back, powerfully, volume, individual stocks act well, that sort of thing. Okay, maybe you get some of these, shakeout and recoveries. Okay, and I've mentioned a couple of these before. This is Confluent, CFLT. It's messy. I mean, you look at the daily chart here. Sorry, I just switched, but 41 to 31 to 30. Okay, you see it, but it's trying to hold here. It reacted well to earnings, bottom line. It's trying to hold in here. Let's say it held in here for a little bit longer and then really started to spike. I don't have a specific buy area, if it gets above XYZ, it's a buy. But I'm just saying in general, it's basically trying to hold most of these gains in May and early June that it had. Let's see if we can get going. Okay, Duolingo, kind of same sort of thing. It's actually been consolidating here net for 3 months, 4 months. Tried to gap on earnings. They sold it off, of course. But you're just looking at something like this kind of from a distant eye is how I say, keep a distant eye on it. And if it can kind of hold in here and then all of a sudden it really does resume higher and the market's getting in gear, would be kind of interesting. This a little bit more actionable. ServiceNow, wasn't the hottest stock, but kind of like Palo Alto, had a pretty good run, got knocked on earnings, broken the 50-day line, but not, it doesn't look terrible. So again, it's a big cap name at this point, but maybe on a resumption, that would be interesting. Samsara, I mention this every week. I like the story. I like the overall setup. It's broken this support here at $25, which is not good, period, full stop. But, you keep an eye on it. And if it really accelerates higher from here, it's got earnings in 3 or 4 weeks, 3 weeks, I guess. But if it really accelerates higher from here, all of a sudden it looks like more of a shakeout. Okay, so these are just things you're kind of looking ahead. And just sort of like Netflix, I noticed, doesn't look so hot today, but it got hit on earnings and then kind of hit the 50-day line and has been holding up. I don't have a lot of confidence, but again, you're just sort of, can it kind of hold up somewhere in this area and then start to resume if the market does? So you just want to keep some of these in mind that have taken on water but haven't, completely blown up sort of thing, okay? Now, beyond that, I will say that there's more, I wouldn't say it's all super liquid, but, more retail stuff is starting to pop, okay? Celsius is one of the few that really reacted well to earnings. So far, it's holding its gains, CELH. I like it a lot, but we'll see what happens. But I do like it. Okay, there's some retail there. Fresh pet food, but it's organic. A lot of, 25% sales growth, EBITDA starting to ramp. It kind of went straight sideways here with a lot of tightness. It did react well to earnings. It's a little extended, so maybe it pulls back, but just kind of starting to see some of that. Dutch Brothers. Now, this one is not ready for prime time yet. I'm just mentioning it because it's had this forever bottoming area. It did react well to earnings last, let's see, Wednesday, I guess it was. Thinner, that sort of thing. So let's see how it goes. But just sort of noting it that we're going to get a positive earnings reaction in sort of the growth retail area. Boot Barn, I think I mentioned last week, it has kind of pulled back in here, but still, above the 25-day line, looks pretty good. OLLI's, which is a little bit, granted, not a dollar store, but, closeout shop. So it's a little bit more of a, hey, are people looking for bargains? But, what I like about it is just it's got, it went through the ringer. And it kind of has this super long, tedious base that has worn out everybody. I mean, we thought it was going to get going here, and it never did. And now it's kind of tried to get going, okay, right here, and it's been very, very tight. So we'll see how it goes, but OLLI is another one, okay? So maybe I'd be all for it. If some growth retail can show up, I'm all over those, but we'll see how that goes, okay? Beyond that, again, it's not hard to find some names. So next, I've mentioned this before, this is Next Tracker, solar, what do they call them? Arrays, basically you're kind of gearing it toward the sun. They're one of the leaders, kind of still respecting the 50-day line here. It did not hold its earnings gap, but not a bad, chart overall. Again, it wouldn't take more than a few days to look pretty good. And finally, it's actually got a peer here that's working. This is Array, ARRY, which has had endless, ups and downs here in the last, I don't even know, 6, 7, 8 months, including this, just really straight down now. Really interesting couple of things. Obviously, number one on earnings. Number two, the numbers are huge. Number three, this looks like it's already the highest volume since May of 2021. So, more than 2 years on the weekly chart. So kind of interesting. It's got pretty good sponsorship anyway. So maybe there's some solar names that can finally get going. Just everywhere else. So Royal Caribbean, whatever. It might need more of a rest. You can see it's just had this huge run, right, from basically 60 to 112 off its lows. Even if you're talking about the breakout, you're talking 75 to 112. But this is really the first time it's testing the 50-day line. So risk reward wise, kind of interesting. Lululemon, not the great growth story it was, but you can see on the weekly chart, obviously it corrected, bottomed out. It had a big gap about 6 months ago, I'd say 5-6 months ago. And you can just see, here's the nice volume clue, a bunch of weeks up in a row, nice volume clue here. And then just a very, very, very tight, huge volume dry up. You get the idea like nobody's paying attention to it, which I like. So hopefully there's no more supply there. And if there's some good news, the market gets going, retail comes into favor, whatever, maybe Lulu can kind of break out on the upside, okay? Pure Storage, they have earnings on August 23rd. It has come down here a little bit with the NASDAQ and stuff, but you can see, big picture, it's really on the weekly chart, it's 7.5% off its high. That's pretty strong for any sort of tech stock. So if it could resume here or gap on earnings, that would be interesting. I keep mentioning On Holdings. I'm just mentioning it here because it's got earnings next Tuesday. So we'll see how it goes. It's been a little, I call it fluffy. There's not really any dramatic power to it, and it's sort of been futzing around its old high. So we'll just see what happens. Maybe it needs more time, but ONON is a name that I keep on my watch list. And then, of course, in the commodity space, more, I hate to make it, but more oils keep doing well. And yes, oil prices are up, but I just checked today, it's like $84, So again, we're not at $100 oil, and you have some of these big boys. This is Schlumberger is testing the top of its range. Okay, there's a bunch of them that look good. And then this is sort of more in the mega cap thing. So you have Schlumberger, Caterpillar, I know, not like, oh, Mike, Caterpillar, but it's acting very well, broke out of a huge consolidation here a couple weeks ago. And you can even see down here, you see these three, it's kind of a weekly volume cluster, as I call it, which is a pretty good clue. It doesn't always work so well with mega cap stocks, but nice earnings gap and holding the move. And last but not least is Boeing, which I have mentioned before. We'll see. I mean, it's Boeing or whatever. There is some old overhead, but just a very, very long, tight area. Nice breakout on earnings, and so far it's pretty much, I don't want to say ignored, but it's done nothing wrong here while the market's wobbled, even when the overall market gets hit, not just the NASDAQ. Okay, so overall, I mean, net, we're in a correction of pullback correction, whatever you want to call it. The NASDAQ is certainly leading the way. Growth is definitely in a correction. It's kind of a mess right now. I mean, not super bearish long term, everything's disaster, mess, but just kind of an intermediate term mess. And I would just respect that case. But when you're looking at The rest of the market, we'll see how it goes. I wouldn't be pushing the envelope here, but again, if you have some good things, of course, maybe partial profit, stuff like that, hold a little bit more cash, be a little bit more discerning on the buy side, but we'll see how it plays out. I still think that until proven otherwise, the odds favor that the overall market probably has some more to go in the short term, but the overall market, the next big move should be up, which, like I said earlier, should be helpful for everything, including growth, but everything else as well. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.